let's get back to the AI trade that everybody loves to talk about. It's certainly a key part of the market for the last couple of years. So now what? Does the AI revolution continue in 2025? In what way? Our next guest, Steven Dickens, CEO and Principal Analyst at Hyperframe Research, joining us. Thank you so much for being with us. So you have a few names beyond the Magnificent Seven that you're going to share with us. But you talk about the AI adoption, the tech trends for 2025. Tell us a little bit about that in the big picture.
Hey, Nicole, Happy New Year. So I think a lot of people have obviously been tracking this trend over the last couple of years, but what we're still seeing is we're really, really early. If you look at some of the data that I'm looking at, 41% of respondents are seeing small proof of concepts with no measurable benefits. That's from a McKinsey study citing 400 CIOs. They went on to say 27% saw broad adoption, but little to no realized gains. And the final data point that stood out for me was that 23% of respondents observed that they were conducting pilots and had seen only a small amount of productivity increases. We are so early in this trend. We're seeing obviously the big hyperscalers, the Googles, the Microsofts, the Amazons make huge plays in this space. We've seen Nvidia pop in 2024, but for some of the other picks and shovels companies in this space, we are really, really early in this trend.
So it's only the beginning. Are you concerned? I mean, we talk about the monetization of AI. Are you concerned in some ways at all?
We've got some concentration risk. Obviously, the likes of Nvidia, you could argue it's anywhere between 50 and 75% of their revenue is coming from 3 or 4 customers. You could expand that a little bit and include the likes of an Oracle or IBM in there and a Tesla. But that really is my only concern. I think what we're going to see is a rising tide raise all boats. What I track is the enterprise adoption of AI. And I think that's going to move and raise the profile for some of those hyperscaler names, but also some of the other names we're going to jump on and talk about, some of those picks and shovels companies that are providing technology into enterprises that will benefit from AI.
All right. So let's get to your stock picks. I know first up you have Cisco.
So I don't do stock picks. I look at the technology. I think Cisco, for me, they've been around obviously as a bellwether name in the industry for decades. We saw them jump massively as the internet came on. I think with some of the things that Chuck Robbins is doing, pivoting more to a software space, the acquisition of Splunk is now closed. On various analyst briefings with those guys before the break, they're executing on that strategy. I think what's not priced in is that Splunk represents a AI play that's not factored in. I think it's going to be good for the overall mix of their revenues and for their margin, but I'm really interested longer term to see where Cisco plays and takes advantage of the Splunk corpus of data that is going to position them. So I don't think this one plays out quickly, but I think as we see Splunk come online and start to be accretive from day one in 2025, they've closed that acquisition now. So I think they're up 17% thanks to your graphics team, but I expect more from those guys in 2025.
All right. And then you have HP Enterprises. You talk about the growth in this area, AI-specific server revenue and things like that, right? HPE has some real potential position that may benefit.
Yeah, so HPE took me out to their investor day end of last year. The stock bumped after they made those announcements because of how well positioned they are for this enterprise AI adoption wave that I hinted at the top of the segment. We're still so early with that, but HPE, 6 of the top 10 supercomputers in the world, that's going to be the infrastructure for AI. What we saw specifically in their last quarter was that AI server revenue was up 33%. Compute in the enterprise is a pretty established space. HPE's been a leader for decades. To see a specific bump of 33% in one quarter was interesting for me. I think the other key takeaway is HP led the march to an ARR focused model with their Green Lake proposition. So they've been in that space now 3 or 4 years at scale, providing GPU as a service and providing that infrastructure into organizations. I think they're in the right place at the right time. The other thing I would say is they're just about to close the acquisition of Juniper. That makes sense for me on so many levels. Global reach, competitor to Cisco, the other name I just talked about. That gets them into a market where they're well established with the Aruba brand, but gives them a lot of upside. So I think a banner year ahead for HPE.
And then you said the leadership in liquid cooling technologies comes from Lenovo. There's some possibilities there.
Yeah, so Lenovo, interesting. I think they're positioned for a couple of reasons for a good 2025. You talked about liquid cooling. They've got some innovation in that space, really leading the charge around what they're doing with their liquid cooling. If you trace back, they've got some heritage from the acquisition and spin out from IBM of some of that technology. The other thing I'd like here about Lenovo, they're really well placed to benefit from some of the woes of Supermicro. We won't talk about Supermicro's woes too much here, but they've had some challenges both on a auditing perspective and also just corporate governance. I think if you look at the structure of Lenovo's business with their OEM and ODM business and how they can sell into those cloud providers, as Supermicro takes a misstep, I think Lenovo is well placed. And then when you add that on to what they're doing around liquid cooling, I think they're in great shape.
Yeah, and I don't want to let you go before you could talk about IBM. You think that's a potential winner too?
Yeah, so IBM had a pretty good year for those guys last year, up 40%. These guys have been in the space for a long time, storied tech company. The reason I'm positive on IBM is a couple of things. We saw the bump that Google had with quantum at the back end of the year. IBM's been investing in quantum for a long time and it's got some leadership there. If there's going to be a company that's going to bring on commercialization of quantum, I think it's going to be IBM. The other things, there's a couple of other reasons for IBM. I think they're going to complete the HashiCorp acquisition. That's really going to bolster their automation story. The company was up 35% last year. I think that's going to continue. I see a couple of other things that people might be missing. The mainframe cycle and their power server business, both have got launches this year now, and that's going to bolster their infrastructure business. So that's non-sexy, but it's foundational for underpinning a lot of their revenue. So I see really strong potential there. So when you add in the Granite models and what they're doing with AI, you talk about quantum, you talk about what they're doing with HashiCorp, and then you build onto that from the infrastructure side, 3 or 4 really good reasons for IBM. If they can post mid-single digit growth quarter on quarter, I think we'll see those guys do well in 2025.
All right, Steven, it's great to see you. Steven Dickens, the Hyperframe Research, joining us. Thank you so much. Great to see you.